Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Today's video is going to talk about Disney. Earnings came out last week, stock has pulled back, and now we kind of want to go over what our approach is going to be moving forward. So, first things first, Kurt had a really nice video last week, ahead of earnings, kind of outlining our our strategy into the report. So kind of talked about how the trade was playing out up until that point, what Disney was pricing in, how Disney had reacted recently, and it just kind of outlined what our thinking was into earnings, and just I guess to briefly summarize it again, this trade when we approached it originally, this most recent June call spread, right? The 120-140 call spread. We wanted to be involved for a longer dated swing, something that we didn't have to necessarily, monitor real close. We liked the way that the overall chart was setting up, and we wanted to get exposure for a long term potential breakout. And when it started to go, it really began to let's zoom in here. It really began to play out quickly. So, when it finally got up to 110, then it kind of a quick move up to 113, pull back, and then it started to ramp. So, going into earnings, I mean, like the overall swing that we were looking for was really shaping up well. We like the look of it. The problem was just right into earnings. You can see it. It kind of like took off. So earnings were on the 7th, which is coincidentally also like the top. But it had like two really sharp up days ahead of earnings, and it was approaching the top of longer term resistance, which you can see from here. Uh, so overall, we were a little bit more cautious. The stock had a big run. Expectations were getting a little higher. They're kind of like the, I don't want to say parabolic, but like the 2 day like really sharp pop into earnings. Couple that with the fact that 3 out of the last 4 quarters it had traded red when it reported. So it made us a little bit more cautious. We obviously liked it from a long term perspective, but like near term, slightly
Libya
more
National
cautious.
Oil Corp
So that's
says
why
fire from
we
arson
thought
attack on
put
Libya's
hedge
Wafa
made sense, right?
Mathala
So
gas
if
pipeline
it pulled back,
extinguished. There was no
it
significant
would
significant damage
cover some of
caused.
the downside exposure. So the put hedge was September 21st expiration, 110 to 105 put hedge, and that would cover at least 5 points of the downside until 105, which would basically be a break back below resistance and down into this range again. So that's why we held that into earnings.
Crude oil futures
Um,
settling at 65.46,
so
up
now what,
45
right?
cents.
So so now like the number came out and it pulled back, and for the last week it's been, let's zoom in. So last week it's been stuck underneath the 20 day here, and it's not totally surprising. Obviously, I mean the recent history of earnings over the last year, it hasn't acted particularly great when it's reported. So that's not surprising to us. Would we have loved to see it go up, like rip higher and really take off? Obviously, yes, but the action overall is not surprising, and actually, you could actually view it as constructive, to be honest, because you can see here, this was the resistance from late 2017, early 2018, right around like 112, 112.50, and for the last week, it pulled back and kind of building a little bit of a higher base right above that previous resistance. So net, a little disappointed it pulled back, but it's holding a higher base. I mean, right now it's got to get back to this 20 day, which you can see here, which is also kind of how we're approaching the hedge. So at this point, we are, like the long call spreads open and the put hedge is also open, and like even though like the stock is off its highs. I mean, the hedge is still worth hanging on to because the Disney still hasn't gotten through this 20 day. Once Disney can get through the 20-day and maybe reset above 114, 115, which would be, right around this area, then, it would seem that the momentum would be resuming, and it would probably be a good point to probably kick out that put hedge. But for right now, with the market a little shaky, the stock still kind of stuck underneath the 20-day, some moving average resistance, it makes sense to hold on. And, the put hedge has about a month left of time value. So, it's not losing value that quick because there is a decent amount of time left. Um, so what we're going to be watching for the hedge is whether it can reset above 114, 115, and then that'll probably be like the point where we look to like close that out and just focus on that long June of next year, the 120 to 140 call spread. Uh, so taking a step back and looking at the overall long term chart again, it just seems that things are really setting up nicely. I mean, like the longer you scroll back, you can see that there's this really nice pennant that formed, and this move, short term it may not look like a lot, but when you look at it from a longer term perspective, you can see that it's a really clear, obvious break of this pennant. And the way you play these is that each level it starts to clear. So it was 112 initially, and now like the next one is 116 and 117. That was the high from 2017. Basically, as it starts to clear these levels, it should start to build momentum. And I mean, is the overall first target is a retest of this all-time high in 2015 at around 122. So that's when we talk about trades, we have the first target and usually a second target. So the first target's 122, but considering the long-term nature of this trade, if this can get to 122 relatively quickly, uh, we may determine that it's worth to hold on and see if it can kind of keep pushing, because a measured move above 120 is really a 10% measured move is really closer to 130. Uh, and for us, it's because options are such a there's so much time left on them. June of next year, that it kind of affords us the opportunity to really try to swing for the fence here. Especially if the trade starts to build momentum into the 120s, depending on what the option prices are, we could maybe like hold for a move closer to 125 or the higher 120s before looking to roll, just because there really is so much time on these contracts. I mean, relatively speaking, had a good entrance, so a decent price, especially risk reward perspective. But yeah, anyway, so when you step back and look, it's really developing nicely. Um, what we're gonna be watching now is a move into like the 120s. It's basing above early resistance this year. Now it's got to get through 2017 resistance, which you can see basically just stalled out right ahead of earnings. And then that's how these pennants work. So as they start to take out levels, the momentum should build. So this could start to move quickly. And I mean, really, like the option positioning, at least the traders are betting that it could potentially move pretty quick, because you have pretty good size in the September 21st expiration 115s, and pretty good size also in the October 120s, um, which to us are kind of an interesting bet, just because that 120 level is really where this trade could start to really catch a lot of people's attention and really start to take off. So there is a lot of bull positioning in near term options. So the possibility of this playing out a little bit quicker than people expect um, is still pretty high. So yeah. So overall, it's so sometimes things work right away. Sometimes it's a little bit more of a hold, and requires a little bit more patience. But Disney, I mean, it's developing well, and like the long term nature of the position, affords us the opportunity to kind of just be patient and let this thing develop, because there's a lot of potential here if it starts to work. So as always, if you guys have any questions or comments, please reach out. We'd love to hear from you. I hope you have a fantastic trading day and wrapping up like the busy retail earnings week with some action tomorrow. So have a fantastic night, and I'll talk to you guys soon.